Hello, everyone. Welcome back to our series on what is the market. We've made it to the wares of the market, and today we are going to be talking about online trading. So, this is technically a where. We're not trading in the pit, not trading at the exchange. We are trading at our desk for the most part, which would fall into the category of online trading. All right, so we're going to go through a little bit about just kind of history of online trading, where things are, where things were, how we got there, etc., etc., etc. All right, so the rise of digital retail. Now, this is not digital retail as in going to Amazon and buying a shoe. This is digital retail as in digital retail trading. Okay, how did it come about? Again, right now we have the technology to, sit in a chair on a beach in the middle of nowhere and place trades, but that was certainly not always the case. So let's just go through kind of how we got here. We're going to go all the way back to 1970. We're not going to stay there very long. This is not a good place back there. But in the 70s and 80s, the very first early electronic trading systems were developed, but they're pretty much only limited to institutional investors. Remember, that's your big money, that's your smart money, and the brokers. So really, retail didn't have any access to that. But in 1991, you had E-Trade. E-Trade was founded, becoming one of the first online trading platforms for retail investors. And back then, we had telephones that we had to call, and it made some funny noises, and you finally got to the internet, and then someone would pick up the phone and dump you off in the middle of your trade, and you'd either make or lose thousands of dollars, but you wouldn't know until 4 minutes later when you actually managed to get connected again. So that was E-Trade back in 1991. A few years later, Ameritrade and Chucky Schwab launched their online trading platforms. And then things were starting to get a little more accessible. 94, 95, internet's coming along. Things are sort of moving. It's sort of the wild west of the internet at that point. Kind of anything goes. But things are starting to coalesce into something a little more organized. And again, you've got Schwab and Ameritrade launching their respective platforms. In 96, 99, this was the dot-com era, so everybody was getting rich. And you had a couple platforms. TD Waterhouse was one, of course, connected to TD Bank, and then Daytech both came along, and then volume started to surge basically at this point because retail investors were getting in on the tech boom, or the dot-com boom, I should say, and everybody was starting to trade, and the internet was starting to become more accessible to more folks. As we hit into the 2000s, we started picking up better internet speed. We could do things a little faster. We could make trades faster. We could see charts faster. We could actually start looking at things while we were commuting. So all these things start to open up, and that led to mobile trading. Right in the 2000s, we started to see mobile app trading, and then in 2013 rather, it all went to hell, and Robinhood came around, and Robinhood made their fortunes there by saying, we will let you trade commission free. And commission free is a stupid thing because if you're actually doing well in the market, like, commission is such it's a tiny piece of it. Okay, a long time ago, commissions were like $20 a trade. That's significant. Okay, you got to trade, 1,000 shares to just deal with the commission at that point. But Robinhood came along and said, hey, no commission. So people started trading one lots and two lots and three lots of things because there's no commission. Why not buy 3 shares of something that costs $10 with your $30 account? You can do that now that Robinhood came along. Okay. The only problem is, I shouldn't say this. Let me phrase it in a way that is safe and compliant. The only problem is that Robinhood had some problems. We'll just say it that way. Okay. I believe they were also selling order flow, which is called PFOF. But yeah, they had some issues. And then in the 2020s, when COVID shut the whole world down, everybody decided to become a trader. Everybody thought, you know what? I'm going to be a trader. I have to be at home anyway. Let me trade markets. And boy, was there just a volume explosion. And at that point, commission free also did become the industry standard. So I'll hand that to Robinhood. They did manage to make commission free a standard. And that's kind of where we are now. There's a variety of different ways to trade online. There have been some gobble ups, right? People have merged, and this company ate this other company, and all that kind of stuff. So, but that's largely how we got to where we are. Okay, the other thing that has grown over time is our ability and access to research, charting, and then mobile. We talked about mobile already. People are able to trade on their phones now from anywhere. And the other thing we have that we didn't really have before was much, much better charting. I can pick up my phone, pull up a chart of something in less than 5 seconds, and have Bollinger Bands and ATRs and all kinds of technical indicators and fairly advanced algorithms running on that chart in the palm of my hand. Okay, same with research reports. I can go to any website I want that has research and I can see it immediately, some of which even ties into the trading platform. So our ability to do these things on the fly now is unprecedented. Okay, and what it means for the market as a whole, kind of anyone's guess in the next 10 years or so. As of right now, though, we have a very, very liquid market. There's a lot of people trading the markets now, which is good. It's a good thing. Okay. And then the bad part of kind of what's going on today is because there's so much access, there's a lot of bad stuff out there. Okay. Anytime you have people in large numbers in one place, there's always going to be a number of bad actors coming in trying to steal money from or screw over those people. Okay, trading scams. I mean, I can't tell you the number of people that I talk to that say, "Oh, I was in this penny stock group, or I was in this options group, or I was in this group or that group, and the admin was doing this or that or the other, and it was just a whole scam, especially in the crypto territory. There's scams, scams, and more scams run by scammers who live in scam houses and scam countries. Over trading is another problem. If you're just starting with trading, you're going to make 40 trades the first day just because you like it and it's fun. That's a dopamine hit. So over trading is a problem. Lack of education is also a big problem. Obviously, you are watching an educational series right now, so kudos to you for trying to take steps to educate yourself. But there are many people that will just dive headfirst in with tons of money, way too much money, having no idea what they're doing. So again, kudos to you for taking the steps to mitigate that particular risk. All right. That's going to take us to the end of the retail trading situation. Next, we're going to talk about one of my favorite topics here. It's the open outcry system and kind of what it was and why it went away and some nostalgia and stuff. Super super fun topic. All right. Thanks for tuning in for this one, and we'll catch you on the next one. Take care.